Hello everyone, welcome to Dezerv's monthly market update. This beginning of the financial year is even more exciting as it is the 18th Lok Sabha election of the largest democracy of the world. In today's video, we have Vaibhav Porwal, co-founder of Dezerv, who's going to share his thoughts with us on wealth creation and the way forward. Hi Vaibhav.
Hi Akriti, thanks for having me here.
So Vaibhav, in today's video, some of the things that we're going to discuss about is what drove the market in the last financial year, how did Dezerv's portfolio perform in the said period, and what are the key events which will drive the next financial year and the market movements for us, and how is Dezerv's portfolio positioned to make the most of it.
Sure.
So Vaibhav, last financial year, Nifty touched almost 22,000 level marks, right?
Yeah.
So what do you think, what were the key events that drove this market for us?
No, absolutely. And last year was a historical year for all the investors, not just in India, but world over. For me, the standout market globally was the Japanese market. Japanese markets delivered 43% returns. And one interesting point is they crossed their previous high of 35 years. So in 1989, Japanese markets had hit 39,000 levels. And this year, after 35 years, they crossed that level. And that for me was a standout story of the last year. Besides the Japanese market, American markets also did really well. Nasdaq delivered 34% returns. Back in India, returns were much higher than what we were expecting. Large cap segment, mid cap segment, small cap segments. All segments of the market delivered extremely high returns. We were not expecting markets to cross 22,000 levels. We were not expecting markets to deliver these kind of returns. So as an investor, we are very, very happy as we sit here. I think three factors which contributed to this. First, the GDP growth exceeded the expectation by a large margin. Nobody had budgeted 7.5% GDP growth for the year, and which for me, the biggest contributor for this uprise. Second factor, which gave a lot of resilience to Indian market, was participation from domestic investors. Domestic investors continued to put money in Indian equity market. And third thing, which everyone is looking at closely, is the impending drop in the interest rates. So these were the three core reasons for which I think markets did really well.
Well, we know that the Indian markets have performed really well, right, given the numbers that you've just said. So how was Dezerv strategies placed during this year? How has Dezerv performed?
Sure. So before I respond to that question, there are two important points to understand here. The strategies that we run at Dezerv and the philosophy behind that. There are three different strategies that we run at Dezerv. First is pure equity strategy, second is fixed income strategy, and third is multi-asset strategy. All three strategies delivered good returns. Second, in terms of philosophy, we give equal weightage to risk and return. We believe that managing risk is equally important when you are managing the portfolios. Now coming to the performance, our flagship strategy, Equity Revival, delivered 43% returns, which was significantly higher than what the benchmark delivered. And I think the great point there is how we were able to manage the risk. And one measure of risk that we track is called down capture ratio. That means in the month in which markets go down, how much our portfolio falls relative to the market. So for example, if markets go down by 10%, if we go down by 5%, that means our down capture is 5%. So funnily enough, our down capture ratio for the last year is 50%, and which tells us that with much lower risk, we were able to generate outperformance for our investors. On the fixed income side, we maintained a short duration and high accrual strategy for our investors. We did not take any duration call, and that allowed us to generate 10% plus annualized returns for our investors. On the multi-asset side, we were overweight on equity, and which benefited our portfolios. So that's how our strategies performed last year. Honestly speaking, it was a spectacular year, and I am of a firm view that we need to moderate our expectations going ahead.
Great. So what were some of the hits and misses of the strategies for you?
So hit, as I mentioned, risk management. We were able to generate much better returns with much lower risk. That for me was the biggest takeaway for our last year's performance. The big miss, honestly, if you ask me, was missing out on gold. Despite being an Indian, our allocation to gold was much lower.
Great. So now that we know this has happened in the last financial year, what are the things or the key events that we as investors should look out for in the coming year?
Oh, next year is going to be an action-packed year. So we call it a 3P year: polls, policies and profits. These are the three parameters that we are looking at. 49% of the world population is going for election. In fact, there is not an election year, this is the election year. 64 countries will be voting. So now that will shape the way global economies work. A lot of money and time will be spent on these elections, and policymakers will be super busy. For India, I think after the election, the budget will shape the course for the market. So this is an important year for us. Second thing that we are closely looking at is profitability of the companies. As I mentioned at the outset, markets delivered much higher returns compared to what we were expecting. That also means that there is some degree of front loading of returns, which needs to correct by way of high profitability growth. So we're expecting corporate India to deliver much higher returns. Third thing is focus on policymakers. The rate cut that all of us have been anticipating, it's keep getting delayed. So hopefully towards the later half of this year, we'll see some action from the policymakers on monetary policy. So these are the three things, in my view, will shape up the way markets perform next year.
Now that we are ready for the 3Ps, how is Dezerv positioned to make the most of it?
So let's look at it asset class wise. On the equity side, we are overweight on large caps. Last year, beginning of the year, we increased our allocation to mid and small cap, but we realized significant returns from that segment of the market. So from January onwards, we have decided to actively cut our exposure to mid and small cap segment of the market. So we are of the view that large caps will be the outperformer in the next financial year, and therefore our portfolios are overweight there. On the fixed income side, there is high degree of uncertainty still on whether the rate cuts will play out or not. So we continue to maintain low duration on the portfolio, yet at the same time we are not compromising on the high accrual. So high accrual, and the added feature there is some allocation to hard assets. So we added some InvITs and REITs to our portfolio so to benefit from high inflationary environment. On gold, now we are looking at it actively. We can't make the same mistake again. So we are of the view that gold will continue to deliver returns, and we may add some gold to our portfolios. So that's how we are looking at our portfolio. Valuations on equity, more comfortable with large cap, fixed income, no play on duration yet, and some allocation to gold.
Thank you so much, Vaibhav, for this insightful information on how the markets are going to be like in the coming year and how Dezerv is well positioned to make the most of it.
Thanks a lot.
Thank you everyone, and stay tuned for our next monthly update.